In many ways, an investment portfolio is like a garden. A garden needs the right combination of sunlight, moisture, and nutrients to grow. Using the right amount of fertilizer can help your plants bloom, but too much fertilizer can hinder your plants' growth and even kill them. Investors can think of growth stocks in this way too. Going overboard can be risky, and your returns could wither significantly if your stock picks falter. Each investor must decide how much fertilizer is right for their portfolio. With that said, let's look at some of the characteristics of growth stocks and what they say about how suitable they might be for various types of portfolios. First, growth stocks generally don't pay a dividend. That often rules them out from strictly income-based portfolios. Second, growth stocks can be volatile and have a greater chance of ending up worthless compared to shares of more established companies. This might lead more risk-averse investors to shy away from them altogether. Third, growth stocks are typically unprofitable early on. This makes them less suitable for investors with shorter investing timelines. So, which type of investor might growth stocks fit better? Usually it's those who are comfortable riding out volatile stock prices, accept the risk that their shares might end up worthless, and invest for the medium to long term. Now, let's say an investor decides they want growth stocks in their portfolio. How much should they buy? Well, that's largely based on how much of their portfolio they're dedicating to equities and how much of that portion they're comfortable devoting to higher risk positions. Take the case of Andrea, who fits the aggressive investor profile with a high risk tolerance. Andrea created an investment portfolio with a 30-year plan towards retirement. Andrea will allocate 70% of their portfolio towards equities with a handful of growth stocks in the mix. These percentages will naturally fluctuate depending on how each investment performs. So it's important for Andrea to keep tabs on their portfolio every now and then. They can buy or sell individual investments as needed to keep their desired asset allocation intact. Think of it as watering the garden to keep the soil moist. Some areas that get more sunlight might need a little extra water from time to time, while more shaded areas might need less. And that's all there is to it. Now you won't get tangled in the weeds figuring out how growth stocks might fit into your portfolio.